Everybody, welcome back to another CYT-Crypto episode. My name is Stephen Aitchison, and today we asked a question on Twitter just a couple of minutes ago. We all think we need institutions to buy Bitcoin and Ethereum and other altcoins to pump the crypto market to $5 trillion. That is going to happen with the ETF. There's no question the ETF is coming for Bitcoin and for Ethereum as well. But the biggest transfer of wealth from TradFi, which is traditional finance, to DeFi, decentralized finance, is going to come from an unexpected source. So I asked for some guesses there as well, and we got some answers to that. But I want to answer quickly what it is. And it's a boring answer, but it is literally going to pour trillions of dollars into the crypto market. And it's index funds. Index funds, just now, if we look at the statistics, we can see that the total worldwide assets invested in regulated, open-ended funds is $63 trillion. $63 trillion. So you've got mutual funds, you've got ETFs, you've got closed-end funds as well, and unit investment trusts under that kind of umbrella. But $63 trillion. Now, what happens a lot of the time with index funds, the costs are lower to run in traditional finance, and that's why a lot of kind of retail investors are invested in them. And basically, what they do is just a basket of investments that these kind of funds like BlackRock, Fidelity, Vanguard, VanEck, and all that, they create these funds and put a basket of kind of shares in them that have a theme around them. So it could be if you want to invest in just kind of tech stocks or something, they'll have an ETF for that or an index fund for that. It's traditional, kind of put in an ETF, and it's passive investing. For investors like us, we don't need to think about all the kind of different shares we want to be in. We just invest in a fund and we just expect that and hope that goes up. And that's working. Traditionally, it's going to work much better than the managed funds. Over time, it's worked much better than managed funds. And the likes of John Bogle, who was huge, he died a few years ago, was huge and instrumental in bringing index fund to the masses, really kind of did bring trillions of dollars into this market. And I think this is what's going to happen in crypto as well. So the crypto market just now is worth $1.5 trillion. Once we get the ETF approved, the Bitcoin ETF approved, once we get the Ethereum ETF approved, and in Canada it's been done already, but once we get that approved worldwide, it's going to open up the markets hugely. It's going to be big for kind of crypto, but more or less Bitcoin and Ethereum to start with, and then it'll kind of float down to the others. So index funds in crypto and on DeFi is what's going to bring trillions of dollars to the market. Because if you imagine if you just say, okay, I just want to invest in layer ones, that's all I want to do. Create an index fund for it. It'd be very easy to do, or create an ETF. And you can already do that with smart contracts just now with the likes of token sets, so using set protocol. And you can do it on Ethereum, you can do it on Polygon, you can do it on Optimism as well. But this is what's going to bring a lot of money to the crypto market. Because imagine you're brand new to crypto, you don't know anything about it, but you kind of do know about kind of TradFi, you know about index funds, and you know you've invested in the S&P 500 index fund or whatever, and you're getting 10% per year. And after fees, you might be getting 8% or something. But if you come to the crypto market and they say, okay, we've got an index fund just for gaming, we've got an index fund just for layer ones. So there's going to be literally thousands of index funds coming to the market, the crypto market soon. And it'll be retail investors that haven't a clue about kind of the crypto market that will be investing in these. And it's going to take a lot of the share away from the $63 trillion that's invested in kind of assets under management just now in these traditional funds, and going to bring it to the crypto fund as well. Why? Because crypto offers a lot more higher returns, or the potential of a lot more higher returns. Now, if we think about it, and this is just very quickly kind of talking about this off the top of my head. I'll do a longer video on it because I really find this fascinating. If we think about it, if we just invest in the safe crypto funds, or if we invest in safe cryptocurrencies like altcoins like Ethereum, if we look at the kind of layer ones, for example. So if we look at smart contract platforms, for example, for me, this is probably the safest you can get in crypto. It's the safest we're going to get. So if you invest in Ethereum, probably apart from Bitcoin, it's probably going to be your safest bet to invest in the crypto market. So you invest in Ethereum, but imagine having Ethereum, BNB, Solana, Cardano, Terra, Avalanche, Polkadot, Polygon, Chain like Tron, Algorand, Phantom, and all these other kind of smart contract platforms. Imagine having all these in one basket and you just say, okay, I'm just going to invest in the smart contract index fund. That's all you're going to invest in because you think it's going to be relatively safe, but you're still going to probably get, if you invested in a basket of these, I think you're going to see at least 100% return. Now, if you invest in the TradFi market and index funds as well, a good return on your investment is probably going to be about 20%. That's considered excellent in the TradFi market. In crypto market, you go 20%. I don't want that a year. I can get that just staking kind of stable coins somewhere. So you wouldn't go for that. So with this, with index funds, it's going to be absolutely massive for the kind of crypto market, and it's what is going to explode the crypto market up to 10 trillion to 20 trillion to 30 trillion dollars over the next 5 years or so. I know that sounds a lot just now, but it's a huge transfer of wealth. When somebody looks at the TradFi market and says, okay, I can get 20% return every year on that, which is fantastic. If you've got $1 million in and you're getting $200,000 per year and you're compounding that as well, that's a fantastic ROI. But if you're looking at the crypto market, the safe kind of crypto market as well, and saying, okay, I can invest in the layer one or the smart contract index fund and get possibly 100%. It's not going to be 100% per year, but if you annualize it and you kind of spread it over 5 years or something, you're probably going to get 200, 300, 400% return on your investment. Now, what happens when index funds are set up? They have to buy the tokens. So if we go to token sets, for example, and we set up our own fund, which I'm looking to do as well, but for you to look into it, if we go to that platform and build this and create our own index fund, what happens is somebody will buy the token. So if I set up a CYT kind of smart contract fund, for example, I get a token for that. And anybody that buys that token, the CYT Smart, for example, will buy the underlying assets within that portfolio. So I might have a portfolio of 15 smart contracts projects in there. So, but a separate token is formed, the CYT Smart, for example. And they buy that token, but they're actually buying the underlying tokens from each of the projects. So imagine there was a big, huge fund just focusing on smart contracts projects or layer ones, and they just focused on that. And you had 15 billion. So you've got $15 billion going into that market or into the projects is going to push the price up. So then you get bigger ones coming in. BlackRock might come in. Fidelity will eventually come into crypto as well. Vanguard, just all of these big kind of index fund providers will come into the crypto market at some point. But imagine you've got trillions of dollars getting pushed into that. They have to buy the underlying assets, so that's going to push the price up as well. So it's going to be a cycle that's going to keep on pushing the price up. So this is going to be huge. And I think token sets or the SET protocol is going to be huge for that. And I've looked at this over the last 4 to 5 months because I've been thinking of a way, how do I start my own kind of portfolio, but manage it for myself and just onboard kind of private user. I've been looking at a DAO, been talking to a few people talking about a DAO to do that, and talking about investing, starting an investment club, which you can do 99 users if you're doing a kind of DAO. Otherwise, you're going to have to go the legal route and form an LLC, etc. And I've been looking at token sets for a few months. I've never pulled the trigger yet, to buy it, because I'm thinking, how can I make other people money, but also how can I make myself money? And with token sets, you can do a streaming fee. You can have what's called a streaming fee, but I'm still looking at that, and I'd like to talk to the team actually, and like to kind of interview the team, because I think this is going to be huge, and I think it's and I'm massively kind of into this. I know index funds are kind of boring, or it sounds boring, but if you're getting a big, huge ROI every single year, why would you not invest in a token fund? So if we look at some of the sets just now, they call them sets, but some of the sets just now, so they've got the DeFi Pulse Index, which a lot of people know about already, and it's got a Uni in it, it's got Makers, it's got Aave, LRC, and they've got 11 more. So I'll just show you some of the ones that's in it. So these are all the tokens that's in there just now, and basically this fund is putting money into them, and it's got the kind of allocation for it as well. Uniswap's got 23%, for example, in this fund, and you can see how this has performed, and we'll do it over a year. So it has been up at $604. It's now down to $149. This would be a brilliant time to get into DeFi Pulse Index. If we look at another one which is quite big, is the Metaverse kind of index. That's got $24 million under management. So the AUM is 24 million just now. And if we go for that for a year, look at that. The price has been $349. It's down to $126. It's still highly volatile, which again, across all the crypto market, but at the moment, the Metaverse Index looks a brilliant place. So it's got Illuvium, Decentraland, Axie Infinity, Sandbox Engine, Waxy, Rally, Audius. It's got all these brilliant projects in there that have still really realised the full potential. So these index funds are going to be huge. In the next 5 years, we're talking trillions of dollars coming into the crypto market because of index funds and projects like token sets. And I just think it's going to be an amazing area to look into. And I've been reading the book Trillions as well, which talks about kind of index funds and the rise of index funds from the 60s onwards. And it's just totally fascinating. It just takes out the middleman. It's like what crypto is, it kind of takes out the middleman. You don't need fund managers because it's all passive income. So you set a kind of portfolio, you decide what's going in the portfolio, or you could set up a DAO to do that as well. And you decide between you what's going to go into the portfolio, and then set up that portfolio and just bring people in. And you've got kind of management fees. You've got what's called a streaming fee. I don't know if Metaverse Index has a streaming fee. It's created by Metaportal, and they're bringing out another gaming one as well soon. I'm just seeing if there's a streaming fee. Yeah, they've got a 0.95% streaming fee. And the streaming fee is an annualised fee on the total market cap of the set that the set creator may accrue at any time. For example, a set is created with a 2% streaming fee. After 6 months, the set creator may claim 1% of the total market cap of the set as fees. So it's a very small fee of the total market cap of this fund. So 1% of 24 million though, if they were getting that per year and that goes up, obviously they could get 1% of that, which is about $240,000, I think, 1%, if my maths is correct. So you can get $240,000 a year if you're managing one of these. So they're still making money, the fund managers, because they have to do the marketing, they have to hire people and stuff like that as well. So I think this is going to be so big, and nobody's talking about it. Literally, nobody's really talking about this at all. I would love to work with token sets. So I've got a few companies, I talked about this the other day, I've got a few companies that I'd said, okay, I would love to work with. Asset management is one of them. I'm not kind of a mathematician or anything like that, but I'd love to do something in kind of asset management and look and create these index funds. Failing that, I'll probably create one for myself and kind of advertise it and just do that. As I said, I've been looking to do something for months now, literally months, probably more than that as well, for a couple of years. And I put out a form there a couple of months ago to say, okay, how, if I invested in a kind of portfolio, would you come in? And it's going to be privately funded, but it would be me that manages it. So it would be a managed portfolio. And I managed to get about 1.2 million people interested. Not 1.2 million people, sorry, $1.2 million. Because I said in the form, okay, it's going to be a minimum of $50,000. Would you be interested and would you be serious about investing if I manage to get this up and running? Did it legally, so you're protected, I'm protected, and everything else. And we managed to get an interest, or I managed to get an interest of $1.2 million, which was amazing. It's absolutely brilliant. So 24 people said, yes, we'll put in at least $50,000, and more would have came, I think. So that showed the level of interest. However, it doesn't need to be managed. We could use something like this, and we could use something like a DAO to actually create a team just to say, okay, we'll invest in these tokens. They can decide which tokens go into a particular index. Now, obviously, you could have 100 different indexes in the crypto world. I would definitely have one for gaming. I would have one for the layer 1 smart contracts. I would have one for memes as well. You could have a meme index, imagine that. So I think this is really exciting. Nobody's talking about it, and it's going to bring trillions of dollars into the crypto market. And I just think it's really exciting. As boring as it sounds, an index fund, I think it's really exciting. It could be absolutely massive. Okay, that's my thoughts on this. It was going to be 2 minutes long, this video. I don't know how long it's going to last, but I always kind of managed to talk more. But I'll do a longer video on index funds and why they're going to change the kind of crypto market totally. It's going to change the landscape totally. And I'll go deeper into the statistics and that as well. This was just a very quick video to answer that question I put out on Twitter. Okay, that's it for now. Until next video, namaste. Take care. Bye now.